Hello students, in present video I am going to explain about third problem from company liquidation topic. I am taking this question from Punkaj publications book. Previous videos links are available in the description box. Sri Chopra is appointed liquidator of Moon Company Limited in voluntary liquidation on 1st July 2003. Following balances are extracted from the books on the date. This is balance sheet. Below to that, you are required to prepare a statement of affairs to be submitted to the meeting of the creditors, and some additional information is given. Statement of affairs he is asking. This is a solution. Heading Moon Company Limited Statement of Affairs as on 1st July 2003. Company is liquidated. Company is going to be closed. Shareholders and creditors appointed one liquidator. Now board of directors have to give assets and liabilities information to the liquidator. Directors prepare a statement of affairs containing the information regarding assets and liabilities. He is asking us to prepare this statement of affairs. First, assets information. Heading is assets not specifically pledged as per list A. Here, estimated realizable value. Under list A, the assets which are not pledged by the company to creditors. These assets, market values, nothing but estimated realizable values we have to show. And we have to present this information under liquidity approach. Means most liquid assets in starting and assets which are having poor liquidity quality at the end we have to mention. See the balance sheet asset side. Machinery 45,000 is known as book value. Balance sheet values are known as book values. And in additional information, see this sentence. The following assets are valued as under machinery 90,000. What is the meaning of this? This 90,000 is market value. When company is closed, when machinery is sold in the market, not 45,000, 90,000 is going to come. So this 90,000 is called estimated realizable value. So for machinery, that 90,000 we should show. But at the end, because liquidity approach we have to follow now, most liquid asset in starting. Here, most liquid asset is cash in hand. Because it is in cash form only, means 100% liquidity we have. So cash in hand 1500. Cash in hand 1500. First this one. Next liquid asset is investment. So our company invested some amount in outside securities. When we need money, if we sell these investments, then cash comes now. Means within a short period we can convert investment into cash form. That is why investment is a liquid asset. In balance sheet, investment value is given as 9,000. This is book value. Here, investments realizable value 6,000. Now realizable values only we should show here. Therefore, not this 9,000, this 6,000 we have to show here. Investments 6,000. Next, book debts. Book debt means nothing but debtors. So in balance sheet, book debt value is given as 90,000. Debtor value 90,000. But see the additional information. Bad debts are 3,000 and doubtful debts are 6,000, which are estimated to realize 3,000. Here, debtor amount 90,000 and bad debt is 3,000. So in this 90,000, 3,000 is not going to come. Subtract that bad debt amount 3,000. Doubtful debt amount is 6,000. But in this 6,000, 3,000 may come. Therefore, the amount which is not going to come is another 3,000 now. As a doubtful debt, that other 3,000 only we should show here. So 3,000 plus 3,000, total 6,000 will not come from these debtors. Therefore, subtract this 6,000. Remaining debtor value in outer column, 84,000. Next liquid asset is stock in trade. Stock in trade means nothing but goods, inventory. Book value is 1500. In additional information, realizable value is 3000. 3000 we should write here now. Stock in trade 3000. Next, calls in arrears 7500. In additional information, there is no information regarding this calls in arrear. Calls in arrear means what? From shareholder, we have to receive 7,500. This is an asset to us because income to be received show under list A. Now finally, machinery, fixed asset. It has poor liquidity quality now. Therefore, at the end we have to show machinery book value 45. Don't write that one. Market value 90,000 we have to show here. Machinery 90,000. Then what are the other assets? Leasehold property. Why we are not taking this under list A? Because in additional information is giving that the bank overdraft is secured by deposit of title deeds of leasehold property. Firm has taken bank overdraft amount 27,000. From bank, company took loan. So banker is a creditor. As a security, company has given these property documents to banker. Means leasehold property is under mortgage, no? Therefore, this leasehold property we should not show under list A. Next, stock in trade, book debts, investment, calls in arrear, cash in hand. Remaining assets come under list A only. Then list A, assets market values total is 1,92,000. Next come to list B. List B is what? Assets specifically pledged. The assets which are given to creditors as a security, they come under list B. Only one asset we have, that is leasehold property. So leasehold property estimated realizable value is, see the additional information, leasehold property realizable value 1,09,000. Leasehold property book value is given as 60,000. Don't show this. Realizable value 1,09,000 here. This property is given to bankers as a security, no? Bank loan is 27,000. That amount in third column due to secured creditors. Here secured creditors are bankers. Overdraft amount is 27,000, no? Show that. If this amount is higher than this amount, then the difference in this fourth column we have to show. Deficiency ranking as unsecured creditors. Then same amount appears under list E also. But here in this problem, 27,000 is less than this estimated realizable value 1,09,000 now. Therefore, difference in last column we have to show. Surplus carried to last column. 1,09,000 minus 27,000, 82,000. This 82,000 write in outer column. Then these two amounts we have to add. Total is 2,74,000. For this we have to write estimated total assets available for preferential creditors, creditors secured by floating charge and unsecured creditors. For this 82,000 what we should write? Estimated surplus from assets specifically pledged. This is surplus now. Meaning is liquidator, if he sells all these assets, 1,92,000 comes. In this pledged property, after meeting the claims of creditors, remaining value is 82,000. These two amounts total 2,74,000 will be with the liquidator. When assets are sold, liquidator is going to receive 2,74,000 rupees. With this amount, now liquidator has to meet the claims of preferential creditors, creditors secured by floating charge and unsecured creditors. So this is called net realizable value of assets. Not only this, in inner column, gross value of assets also once we should show. See, summary of gross assets. Gross realizable value of assets specifically pledged. Leasehold property. This one. Net value is 82,000. Gross value is 1,09,000 now. Show that amount here. And other assets under list A. Total assets market value is 1,92,000 now. That amount also here. Two amounts total 3,01,000 is known as gross assets. So till here assets related information we have shown. Continuation is information about the liabilities. For liabilities information, three columns we have to open. This is extra column. Second column, third column. Continuation of these two columns. First column, gross liability. Second column, liabilities to be deducted from surplus or added to deficiency. First, Secured creditors as per list B to the extent to which claims are estimated to be covered by assets specifically pledged. Under list B, we have this information now. Secured creditors are 27,000 bank overdraft. This amount we have to show here. In first column, bank overdraft. In third column, you need not to write the amount because this 25,000 already we have deducted from this asset value, no? 1,09,000. Remaining 82,000 only we have taken in this column. Means in this net asset value 2,74,000, already 27,000 is deducted. Therefore, again we should not deduct 27,000. Next, preferential creditors. Preferential creditors means what? Even though security is not given to them, while repaying the loan amounts, liquidator has to prefer them. So, preferential creditors are as per list C. And in question, see this sentence. Preferential creditors are 1500. Directly is given a preferential creditor amount 1500. That amount here in first column and in third column also we have to show. Net asset value 2,74,000 minus preferential creditor amount 1500. Remaining amount is 2,72,500. So from this net asset value to creditors, preferential creditors, when 1500 is cleared, then the remaining asset value is 2,72,500. Next, whose claims we have to meet? List D creditors. Who are they? Creditors secured by floating charge. Floating charge and a fixed charge. What is the difference? Once you see bank overdraft, suppose company failed to repay this loan amount, then banker can take leasehold property, no? Means to this creditor, banker, company is giving a particular asset, leasehold property as a security. Sometimes instead of giving a particular asset, company may give some group of assets to creditors as a security. Then those creditors are known as creditors having floating charge. Means if company fails to repay their loan amounts, they can get back their amount by selling any one of those assets. See the question. For debentures, in brackets he is giving having floating charge. Means to debenture holders, if company fails to repay their amount, what they can do? They can take any one of these assets, they can sell them and they can get back their amount. So they come under floating charge creditors. To them, company has to pay 75,000. That amount in first column and in third column. Then from 2,72,500, 75,000 also if you deduct, then the remaining amount with liquidator is 1,97,500. Now liquidator should prefer list E creditors. Who are they? Unsecured creditors. Company has taken loan from them and the company has not given any asset to them as a security. Who are they? See, under liability side, liabilities for purchases 30,000. Means company purchased goods from suppliers on credit. Now company has to pay 30,000 rupees to them. To these creditors, company has not given any security. So nothing but creditors. 30,000. It comes under unsecured creditor. Liabilities for purchases 30,000. Next one. Come to the last sentence. Telephone rent outstanding 150. For this outstanding expenditure also, there is no security, no? It comes under list E, unsecured creditor. Telephone rent outstanding 120. Two amounts total in outer column, 30,120 and in first column also. From 1,97,500, when liquidator clears this loan, list E creditors loan, then the remaining amount with liquidator is 1,67,380 and all these liabilities total is 1,33,620. Then this 1,67,380 is known as estimated surplus as regards creditors, being the difference between gross assets and gross liabilities. See, this amount is less than this amount, no? Therefore, this is positive value. That is why surplus word we used. With this amount, now liquidator has to clear the claims of shareholders. In question, preference share information is not given. If that information is given, then continuation is till list E completed, no? Next list F we supposed to write. But in present problem, preference shares information is not given. Therefore, no need to show list F information. Directly list G. List G is related with equity shares. Issued and paid up capital. See the question. 24,000 shares. Here, when only shares word is given, meaning is equity shares. 24,000 equity shares of one share value 5 rupees, no? 5 rupees each. 24,000 into 5 rupees, 1,20,000. Equity share is as per list G, no? Now, this amount also less than this means from 1,67,380. When liquidator clears the claims of equity shareholders 1,20,000, then remaining amount with the liquidator is 47,380. This is surplus now. For this you have to write estimated surplus as regards members. Members means contributories as per list H. So this is statement of affairs. Problem is completed. Take a screenshot of the solution. Continuation. Next page. Continuation. This is the end of present video. Hope this video is helpful to you. Thank you.